Hi, for those of you who don't know who I am, my name is Josh, and I'm from the Good Brothers Trading Academy, and today's lesson is on the V-Shape Recovery. This one pattern shows up on all time frames and could be the pattern that helps you become successful in the market. Here, let me show you. So the V-Shape Recovery is a very highly predictable pattern. This is ticker symbol MU or micron, and we're looking at a 1 minute time frame. Now, I'm bringing up the 1 minute time frame because I want to show you this pattern works on all different time frames. So I'm going to show you a couple different ones. Now, we love the V-Shape Recovery because it goes with the saying, buy low, sell high. It should make sense to us that we are buying at a discount price, expecting price to go up so we can make money in the process, right? So we get this very sharp move lower, and this is going to happen again on all time frames. So we want to see a sharp move lower in the market. We want to see a recovery happen or a bounce. Remember, just like this, we get a sharp move lower, a recovery bounce, a consolidation sideways before liftoff. Or we get a sharp move lower, a bounce, a pullback, and a move higher. Okay, so it's no different. Get the sharp move lower, a pullback, a consolidation, and a move higher. Let's erase that. There's a couple things we want to pay attention to. First, it's the RSI. Notice, and I don't use this indicator on everything, and I don't agree with using it as an oversold or overbought indicator, but what I do like it as is when we are in an oversold or an overbought position on the charts, we can look at it and utilize it as a momentum indicator or an indicator showing us that there's a divergence in the market. And what I mean by that is, if you look at where my crosshairs are at right here, and you go down, you look at where the RSI is at an oversold spot in the chart. If you continue to follow, we know that the stock continues down. Well, at this point where my cursor's at, and if we look straight down, the RSI has lost some momentum. The RSI made a higher high where the chart's making a lower low. So let's draw that in. The chart's making a lower low. The RSI is making a higher high. Do you see the negative divergence that's happening in the market? This is showing us, this is our first indication. First, we want the sell-off. Second, we want to see the divergence. This is going to start to help us realize that there is buyers coming in at that demand zone area, okay? And then we don't want to necessarily be the first ones to the party. We just want to make sure that we participate as the pattern continues to form. Let's let the institutions do their job and start to buy it at the lower price. We just want to learn to trade alongside the institutions on this particular pattern. Now, the next important thing that we want to pay attention to is we want strong momentum in the upward direction. We want to see a strong pull going up, and then we want to see a flag going sideways. We want to see the stock starting to make higher highs if possible. This gives us that flag pattern that we look for. And then we get the explosive move up. Now, don't pay attention to that guy. Pay attention to what I'm about to tell you. We need to see the RSI on an oversold with a negative divergence with a strong move up and then a consolidation sideways. We must be patient for the consolidation sideways. This is the other important part. We want to know where to put our stop loss. It's important to understand when to get out of the trade just as much as it is to learn when to get in the trade. So for example, our stop loss is going to be at the power candle low or the pivot low on this particular trade, or the break of the flag pattern. Now, if you're a beginner, I recommend putting your stop all the way at low a day. But this means you're going to take very small share size. If you haven't seen the video on my 1 to 2% stop loss, I recommend that video for you. If this is making some sense and the V-shape recovery pattern sounds like it's something you would like to trade, Leave in the comments below V-shape recovery. Now, briefly, we mentioned demand zones and a supply zone. So if we delete everything on the charts at this point and we put in where we understand that there was some demand happening in the market, this would be a demand zone. This would be a supply zone where this consolidation period happened. This would also be a supply zone. Now, I use supply and demand zones as if people would be using support and resistance in their trading. I believe there to be zones, and I want you to look for zones in the market. This way that you're not getting stopped out of your trades quite as quickly. How many times do you think there's a support line just to stop out of the trade, then the trade reverse and continue? We want to understand that there's an area in the chart where buyers and sellers struggle, or where buyers and sellers step into their positions. Now, we have more videos on supply and demand zone. If you want to click in the first link or in the description box below, this will take you to our free Discord. This is where you could work closer together with me and my team. We have an entry-level trading course for beginners under 10 bucks. The course gets in technical analysis, reading candlesticks, supply and demand zones, support and resistance, a basic level of trading from A to Z. Now, if these are our supply and demand zones here, and we have demand down here in the market, and we have supply up here, this would make sense on where we need to get into our position. We wait for the pattern that we recognize to be put in, the bull flag. We get the move higher. This would be where we sell our position at, entering the supply zone, or this is where we take off our first position and then we take off our second position into the next supply zone. Now, again, this just doesn't happen on the 1 minute time frame. Here is a 30-minute time frame that we could see the same pattern. So we get the sharp move lower, we get the move up, the consolidation period, and then we get liftoff. Okay? And at the top of the power candle is where we would take profit. Now, for those of you who've been trading before the pandemic, this is the daily chart. And it's important to look at, because if we saw this coming ahead of time, if you were in the market and we get our sharp move lower, we have our divergence on the RSI, we get our sharp move higher, we get the consolidation period, or the pullback, right? So it'd look more like this pattern, pull back and lift off. And then we get the lift off. Look how powerful this went. We broke the highs on the SPY chart. Now, if the V-shape recovery is something you're already playing, or something that you would like to start playing, go ahead and write in the comments below. Also, if you haven't already, give us a thumbs up. We're new to YouTube. Subscribe, turn on the notification bell so you can be notified every time we upload new content. If you have any questions, also put those in the comments below. I'll see you in the next video.